Hey everyone, welcome to the channel. Are you a new immigrant in Canada trying to figure out how to grow your money? Today, I'll show you how to invest in Canadian dividend stocks using your RRSP. This is especially useful during market corrections, when great stocks go on sale. We'll highlight the top TSX stocks with high dividend yields that you should consider. Let's get into it. What is an RRSP? Let's start with the basics. RRSP stands for Registered Retirement Savings Plan. It's a tax-advantaged account that helps you save for retirement. You won't pay tax on your investments until you withdraw them, ideally when you retire. And one of the best ways to grow your RRSP, dividend-paying stocks, especially when they're cheap. Why dividend stocks? Because they pay you passive income just for owning them. Even if the market is down, you still get paid. And when the stock recovers, you benefit even more. That's why now, during a correction, could be a great time to buy. Let's look at our first stock, Bank of Nova Scotia. Bank of Nova Scotia, or Scotiabank, is one of Canada's big 5 banks. Right now, it's trading at around $65.50, and it's down 15% this year. Why? A change in strategy. The new CEO is moving money away from Latin America and focusing more on the US and Canada. That's a big shift, but it could be a smart one. Scotiabank recently bought a 14.9% stake in KeyCorp, a U.S. regional bank. This expands their U.S. presence, something other Canadian banks have done successfully. They're also pushing for more growth in Quebec. At the same time, they've sold operations in Colombia, Panama, and Costa Rica. Bottom line? They're focusing on fewer, stronger markets. Now, the big question, what's the reward for investors? At today's price, Scotiabank pays a 6.5% dividend yield. That's $65 in annual dividends for every $1,000 invested. You get paid to wait while the strategy unfolds. If you like stable, income-generating stocks, Scotiabank deserves a look. Let's talk about the second stock, embridge. This is one of Canada's biggest energy infrastructure companies. Pipelines, utilities, they own it. And guess what? The stock is up 36% over the past year. Why? Because interest rates are dropping, and that's great news for companies that carry a lot of debt. Embridge is growing fast. They have a $26 billion capital plan in motion, and they just bought 3 U.S. gas utilities for $14 billion. That means more stable cash flow and long-term earnings growth. They expect earnings to grow by 7 to 9% through 2026. This makes Embridge not just a dividend stock, but a growth stock, too. Here's what makes Embridge extra special. They've raised their dividend every year for 30 years. That's consistency you can count on. Right now, the dividend yield is 6.1%, another great return. If you're looking for long-term, low-maintenance income, Embridge is a top choice. Scotiabank and Embridge are 2 strong dividend stocks worth watching, especially in your RRSP. But remember, do your own research. Every investor's situation is different. And if you're serious about building wealth in Canada, subscribe for more investing tips. In the next video, I'll show you how to start investing with just $100 a month. Thanks for watching and happy investing!